Welcome to the October 4th, 2021 Advance Report from McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Asset Management, your financial weatherman with your fast-paced weekly tour of the financial markets addressing the headlines. What do we have right here with the Dow Jones Industrial Average? We've got the same level as April. That is almost 6 months of flat, little rally in between. What's happening right now? Slowing growth and a rotation. October is going to be very important because the earnings reports start to come out and you're going to see some big shifts in the charts that I'm about to give you. It's a whole new perspective and we want to get ahead of it. This is GDP, gross domestic product, economic growth. We had a big recovery quarter, 12% in the second quarter of 21, slowed down to just below 6%, slowing all the way down to below 3% by the time we get into 2023. So it's not a recession, at least in terms of this forecast, but also, this is Bloomberg, by the way, a consensus of economists, but they've been lowering the estimates for the growth. And that slowing growth says you will pay less for companies with less growth. That's the theme that's emerging from the markets right now. This is gold. So I heard an advertisement for gold this past week, and so I looked it up. Gold hit $17.50 per troy ounce this week. Well, back in 2011, a little over 10 years ago, it was $1,900. After a decline from that 1900, gold is only up 6% over the 10-year period. How does that compare with other choices? So keep in mind, gold is supposed to be an inflation hedge and a store of value. Well, in the case of this 10 years, not a good one for at least the last 10 years. Dow Jones Industrial Average is about a triple. Now keep in mind, back in 2011, most people had given up on the equity market after a range-bound period where the Dow didn't make a new high until 2012. From 2000 to 2012, it was flat. A lot of people had given up, the opportunity being 300% instead of gold's 6%. This is the CPI. So inflation over that same time period was 20%, gold only did 6%. That's how we start to select assets that say, historically, have they done the right thing? And of course, the NASDAQ, growth and innovation, about a 650% for the growth and innovation NASDAQ 100, if you will. That was the best opportunity, although it was miserable in the tech wreck. It shook most people out. That's part of what we're doing at McGowan Group Asset Management, putting together plans that say, we're not going to leave behind great assets. We're going to structure those to cover a lot of the allocation risk that people take, warnings, and it's a dynamic allocation strategy that takes into account how are we going to do going forward. With slowing growth, I don't think the high multiple technology is the best place to be. Obviously, we've talked about energy and other things. So this is natural gas, up 125% so far this year. It's signaling winter shortages. The pipelines benefit obviously from the flow, and they get paid every day. So we like the pipeline category, not without risk. It was one of the worst performers last year. Now the energy sector has risen to be the best performing S&P sector so far this year. A couple of other things in the rotation for slowing growth. The big part of the recovery has happened. You can see it here with Bed Bath & Beyond, and this is a year-to-date chart. Hit 54. The Reddit bandits, the Robinhood Reddit bandits ran the stock up. Then you've had a collapse here to about 16. Well, what happened with Bed Bath & Beyond? The recovery play, well, the economy is essentially recovered. Retail traffic essentially recovered. Now you come back to what companies are worth. They had a big drop in revenue, and you can see the risk this week down about 40% and down 2/3 from that peak. So the retail recovery play may in fact be over. China is another warning this week. Look at this. This is Evergrande. the largest real estate, one of the largest real estate companies in the world, highly leveraged, 300 billion in leverage. They've defaulted. They only had 70 billion in revenue. China obviously overbuilt. But we scrubbed most all of the China exposure from the portfolios, in part because of their shared prosperity initiative and the believability, if you will, of their numbers. This is a big change for emerging market allocations, because in emerging market equity, China was the biggest part of that. And it doesn't make sense because China is essentially emerged, not emerging. So if you have emerging market allocations, you want to take a close look at that. We urge you to set your time for an appointment with the team that cares by Zoom or in the office. Just go to networthradio.com. Thank you for tuning in to YouTube McGowan Group. Thank you for tuning in to YouTube McGowan Group. This channel, plus networthradio.com, the Apple Podcast, all of that is devoted to helping you as a client make great decisions, especially when the markets are under stress. A team of 10 devoted to providing you with the intelligence, the support, and the excellence in service that backs you up longer term with the confidence to know that you've got a highly qualified team on your side. So be sure to download the Apple Podcast. You just type in Net Worth Radio. It'll come right up there. YouTube, we ask you to subscribe to McGowan Group for fast-breaking updates. Now, our team does planning for North Texas families and also around the country, especially for multi-generational planning. We coordinate those plans with your estate attorney and your CPA for tax planning. We coordinate that in a way that helps you make the right decisions at the right time. So I urge you to set a time to come down to the Crescent, meet the team that cares, or set your Zoom meeting so that you'll actually be able to have a process going forward for reviews, handling crisis, and of course seeking to own the best assets that will produce reliable and hopefully superior profits over time. Excellence in service is another key part to that, and I think you'll find McGowan Group is best qualified to provide great service and help you make great decisions. Value at risk of loss, we actually measure that, and that can work in our favor when the markets are in crisis. We tend to get our clients pay raises for more forward reliable income. Be sure to set your time to come down and meet the team that cares, McGowan Group Asset Management.